Hey everybody, it's Greg Harrelson here with Century 21, the Harrelson Group. And of course, joining me as usual is Abe Safa, also with Century 21, the Harrelson Group. And we want to talk to you again this week about what's going on in the local real estate market around the Grand Strand. And when we say Myrtle Beach, we're talking about the entire Horry County, the entire MLS and whatnot. That's what we really focus on. Abe, thank you again for joining me. I see the little caption there, mortgage rates approaching 7%. I don't like that. That's not good, Abe, but let's just talk about what's going on in the market, because even though emotionally we may not like that, we're not seeing any major downturns right now in the market, but let's talk about the numbers and we'll go from there.
Yeah, I mean, just when I felt like the roller coaster ride was over as far as interest rates, and then now they're spiking back up again.
Yes.
As of yesterday, there was 6.95, so they're approaching 7%. The numbers haven't come out today, at least not the source that I use.
Yeah.
I'd like to see if they actually break 7% today. I'll be paying attention to that as soon as it hits. Usually hits about 1 o'clock, 1:30. I'll get a notification. So yeah, it's not a good thing.
Yeah.
Credit is tightening out there with lenders. You've got a Federal Reserve chairman that is still being a pit bull about this, and he wants unemployment to go up. And that's just not happening. The employment market is still strong. The numbers are still coming in strong. So I don't know what that's going to mean moving forward, if there's going to be another Fed rate hike or if not. But we're approaching 7% again. I thought by now, by this time, that we would be in the high fives, but no one saw the banking crunch coming. Right. Yeah. So with the bank issues right now, credit tightening, it's kind of changed things.
Yeah. I know you and I look at this stuff and listen to different economists and people out there in the, trying to guide us on as to what's going on with markets and whatnot. And we surely don't want to pretend that we're those economists and whatnot, but we do listen. And what we do is we listen, and then we look at what's really going on in our local markets, and then try to see, okay, well, how is all this stuff impacting us right now? So yes, I mean, I guess, another thing is at one point we thought that we were going to have around 4.5 million sales across the United States. And I think Fannie Mae is predicting it's going to even be slower than that, maybe 4.2 million sales. Now, in a normal year, not the hottest ever, but in a normal year, how many sales is there in America?
5.5 to 6, somewhere in that ballpark. 5.7.
So literally, I mean, we're talking about nearly 35% less sales than a fairly good real estate market is. Now, because inventory is still low, usually when you hear people talking about there's going to be fewer sales in a market, usually that's a demand issue, meaning there's no demand and there's a lot of supply, and that's what causes prices to go down. But for the most part, we haven't seen any significant changes in pricing, and we haven't seen any growth in inventory. So inventory is still low, and that's been our savior. We do see a lot of building going on, and you would think, well, gosh, these builders would continue to provide enough supply, and inventory would increase. We haven't seen increases yet. In the event that we do see increases in inventory while the number of sales are going down, that could be interesting. But again, as Abe and I have been talking for the last year, we just don't see we don't see where the inventory is going to come from and how it would really go up. Any other comments on that?
Yeah, I mean, if you would have told me 2 years ago that we're going to be approaching or maybe even breaking 7% mortgage rates, I would have predicted that the inventory was going to skyrocket, go up.
Yeah.
But it really hasn't. When you look at a national level, inventory actually went down. So we've got less at a national level. We've got less inventory now than we had beginning of the year. Mm-hmm. In our market, our inventory has actually been up when it comes to single family homes resales. Our inventory since the beginning of the year is up 14%. Mm-hmm. But that's pretty normal. That to me, that's more of a seasonal thing than the market conditions. But the pendings are up 59%. So I'd like to show you this chart, Greg, because this is a good way to look at this. So the top line is total inventory for single family homes. The bottom line is the number of pendings. Mm-hmm. So if you see that this first that first arrow where it says 29.48, yeah. So this is the beginning of the year. So you see inventory was lower. Then if you go all the way to the right, you'll see inventory went up.
Mm-hmm.
So, but if you look at the bottom line, you'll also see at a faster pace, the pendings went up.
Mm-hmm.
Right. So even though we have a little bit more inventory right now than the beginning of the year, there's a lot more pendings. As a matter of fact, 41% of all homes right now are under contract. Back beginning of the year was only 29.48%.
Yeah.
So to me, this is surprising. I mean, I thought things would be slower than what they are. Yes, there's less transactions overall, but the market is moving. The market is consistent. It's stable.
Yeah.
Right.
It's
So,
kind of like a flock of birds. Like when you look at what you did with those two arrows, is they're moving together in unison.
right.
And that's why we're not seeing any adjustments in prices. Now, if the bottom line, the red line here, which for those of you know, I don't even know if Abe knows that line is red. Can you tell that line is red?
I can now.
Okay, you can now. Okay, so yeah, he's got a little bit of colorblind issues, and I don't know if it's convenient because sometimes he seems to know the colors, sometimes he doesn't know. So I don't know what it is. Selective.
The top is blue, right?
Selective hearing. But if that lower line, that red line, was to be trending down while the blue line was trending up, that would be a total different game.
Right.
Yeah. And so that's why Abe and I look at this stuff so much, is because we can kind of see it's like right now we see that these two lines, which is supply and demand, because the pendings are giving us an idea of how much demand there is out there when new inventory comes on. And so we're seeing that they're kind of moving together, and which is maintaining the prices, I guess, keeping the prices where they are. Some could argue that if that continues, that prices could go up a little bit more. But then you've got the interest rates, right? So some people would say, well, if this is the case, shouldn't prices be increasing? Well, you know, if prices start to increase, notice how these interest rates actually start to increase with it. And then that takes away some of the demand and slows this whole process down. You know, that's kind of what I see, you know, in the numbers.
Yeah. So, I mean, looking in hindsight right now, I probably should have used different percentages. So that percentage there is the absorption rate. That means what percent of the active units are actually pending right now.
Mm-hmm.
I really should have put the gap between the two, because this gap is actually getting smaller, but you could misread this and think that the gap's getting bigger. So the gap between pendings and active is getting smaller. And as long as they stay together or that gap gets smaller, I mean, things are looking really good for sellers. What we don't want to see is a separation. We don't want to see the blue line really go up and then the red line either stay flat or go down. That's what we don't want, because that means that homes are just accumulating on the market. So if you go back a little bit further, that tightest section here, that was the hottest part of the market right after COVID. You see that really, really tight gap. Almost everything on the market, like almost 80% of everything on the market was under contract during that little section there.
Mm-hmm. Got it. Okay. Well, good. That's really good. And good. Hopefully you all have the confidence in Abe and I to, you know, that if you need anything, you'll reach out and give us a call. We do pay attention. You know, one of the things that we don't talk about on this, and maybe one day we will, is we don't talk about like what we do when we are helping or serving a client. So we do know the market, but in addition to knowing the market, we also know what needs to be done if we have to sell a property and we need to market that property. We kind of, because we know what's going on in the market, it makes us better at marketing and finding buyers for particular properties to make sure that we're maximizing one's sales price. I mean, one of our commitments is to protect your equity and maximize your sales price if you're ever thinking about selling. So if you do need any information, whether or not you're looking to buy, sell right now, or just need some information, here's our telephone number. Reach out to us. This is our direct cell number. So you can call us, text us, ask us any questions. We just hope to earn your business, you know, sometime in the future. All right, Abe, thanks for that information. And we will see everybody and talk to everybody next week.
Thank you all for watching.
Bye.